Good evening, ladies and gentlemen. Today is the 20th of April, and once again, at this point, one should just wonder if every day just make a long straddle at the open of Nifty, and it should pay you at any point about 3 to 4% easily, and you book that and get out. But jokes apart, we gapped up today. Didn't seem to be any particular reason for such a big gap up, except the vaccine-related news or whatever that states can procure it themselves. But from there, we had a steady decline. What looked to halt at yesterday's close did not and continued to cascade. So overall, the day would have been tricky if you were into non-directional strategies. If you shorted the market, then it would have been a hell of a good day for you. That being said, today was an alright day for me. I ended at break even, and that outcome is something I'm more or less comfortable with, given the day it was. And yeah, I hope you have some takeaways from this video as to how to manage a triangle when you have a trending move that takes you basically 300 points and then recovers about 100 points. So that being said, thank you so much for watching. I hope you had a good trading day, and I will see you next on Thursday. Have a great evening.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. The time is 9:26 and I've just entered the position for the day. One thing that seen right off the bat is a massive gap up, much more than what is expected, and this is surprising because most Asian cues are not so great, and last night as well US markets ended in the red moderately, and futures now are in the green slightly. This being said, people who sold call yesterday will be completely trapped and in a very difficult situation. So more or less the idea is to keep a wide range triangle. Today is a Tuesday, but tomorrow being a holiday, this is the last trading day before the expiry session. Idea will be to not adjust this position to the maximum extent possible. The sizing is also relatively lower because of the kind of volatility, and yeah, the idea will be to not do much. We will wait and see if some kind of short covering trigger further pulls us towards 14,600, in which case we will be taking risk off on the call side. And if we start heading lower and start testing yesterday's close, then we will be moving our puts down and risking off on the put side. In both situations, the idea will be to take off risk rather than to take in additional risk by bringing the triangle in closer, because in the current markets that we are, it makes more sense to risk off than take additional risk on the counter side and then get reversed upon. Okay, 10 o'clock update is just seen like 50 points of profit booking across everything. So after the gap up, IT got sold into quite a bit, but Bank Nifty is still more or less holding above 31,500. So not yet tested yesterday's high, and position remains exactly as is. I'm not going to be making any changes to this until we see a clear test of 14,400 on the downside. The reason for this is there were a lot of 14,400 and 500 calls written yesterday, and generally when we see a dip, we might see that used as an opportunity to cover those shorts, which is why not expecting too much of a downside cascade to happen. So that being the case, continue to hold exactly the same positions, very comfortable. 250 points on the upside, 250 points on the downside. Will continue to hold as is. Okay, the time is almost 11 o'clock, and we're more or less holding the range of 14,450. We're holding plus minus, in Bank Nifty at 31,500. Nothing to give you any sense of strength or weakness, and the idea now is I want to move down my calls to 14,650, but I don't want to do it now. The idea will be if we can enter on a green candle, if we can enter these calls, the 14,650, it's something like 22, 23, 24, then that would be a good pricing to just shift our risk reward slightly. And yeah, for now, I'm not going to do any changes at the current prices. If we do see an up move, the idea will be if we do head towards 460, 470, use that as an opportunity to roll down the calls. But apart from that, nothing else to be done to this trade. If we do cascade down from here, start heading towards 14,400, then we'll square off half the quantity of puts and potentially actually break 14,400. Then we will square off half the quantity of puts and move them down. But until then, no plans to change anything. Okay, so we are seeing more or less a slight down move from 14,450. This green candle formed, and I used this green candle as a way to move down some of the calls. So about 40% of the calls have moved down, and the idea will be to wait for certain green candles for these to expand to something like 17.5, 18, and move more of the calls down. There's really not much premium left on the 14,700. Not moving earlier didn't necessarily make a difference. These lost more or less the exact same number of points as these did, but we don't want to shift into this at the worst possible price. So waiting for some sort of retest of 14,450 and use that as an opportunity to move down all of the calls. Okay, I've moved down the calls to 14,600 because we're testing the 14,400 and ID is looking really weak and there isn't any particular strength in Reliance, Bank Nifty or anything else. So we not have too directionally biased a view, even though expecting buying to pick up at 14,400. I've still moved down the calls to 14,600, which is still a comfortable strike. So now we have 400 points up and down, and even if there is sort of a reversal back to days open, which is very much possible, and the next triangle should lose value, and in case we start heading back up to 14,450, we will be risk managing these calls by probably taking in 50 points, moving our put strike 50 points up. Okay, so a little bit of a put side IV spike after we had a quick down move of about 30 points, and more or less now at the zone that we closed yesterday. So yesterday's high in this area. Now the idea is that this should act as a support, and yeah, a lot of IV based expansion on this support. Even if we close here, these puts will not close at these prices. The idea will be to wait and see a test of 14,350. That should cost us probably a point or two. If we test and we start breaking down from there, then we'll get out of the put side, probably sell the 14,100 put. So that's the plan for now. We'll keep it posted. Not in a rush to adjust this. This is a lot of it is just a spike in the fear. Okay, exited the 14,200 put at something like 48 and entered the 14,100 put. I don't want to take too much directional bias, and yeah, the put side IV expansion really cost quite a bit, but now the spread is now 500 points and far better placed with lesser of a directional bias. Well, our previous position didn't have much of a directional bias, but the rate at which puts expanded really threw it off. So yeah, this is the only change that has been done. Okay, the time is 12:50 and I'm using, basically I have used this green candle to move down the calls further, and basically our calls are 200 points away and our puts are 250 points away from the current spot. I had to do that because put side IV was spiking into oblivion. These puts had expanded to about 35 or so. Yeah, really spiked with a big fear. Every time there's a down, there's a big increase in fear, and yeah, there hasn't been a short covering move all day, and I'm not expecting there to be one. But invariably everything that I'm expecting seems to be going wrong lately. But regardless, it will not make too much of a difference because these calls are still quite far away. The idea will be if we start testing 14,400, then once again we'll move the calls back up. So that's the plan, more or less. This triangle is trading at 53, 54, and if we just hold range from here, it should expire by the end of the day, but less than probably 45. So that being said, still got 2.5 hours to go, so we'll keep it posted. Okay, so current hypothesis is that we should have most likely made a bottom here So we filled the gap, we tested yesterday's close, we dipped below that, and my hypothesis is that this should now be the day's bottom. So why? Because we are now making higher low formation. So idea will be we will wait for a red candle, and in that red candle move these puts to 14,150, which is currently trading at 30.31. So it's more or less the plan. First we'll move half the quantity and then we'll wait for confirmation and move. Okay, not sure and don't want to wait too long as well. So if at this point have moved the puts to 14,150. These 50 strikes are annoying because you get slippage. My average sold price became quite not so good. But anyway, regardless, now we have a 400 point triangle, which is trading at 57. And yeah, this can work out in one of two ways. One, we hold the range for the rest of the day and this works out very well. The up move is far more drastic than what I'm expecting, which will be a move towards 14,450. That will expand these calls a lot, but these puts will balance to a large extent. So from a price perspective, by closing it shouldn't be so bad. Or three, we have a big cascade and once again head to the day's low, and in that situation this will start to bleed. What will I do in case we start heading towards the day's low? Once again it will be squaring this off and moving back down more or less. Yeah, about 2 hours to go for market close, and this more or less should be the last position that I take. Okay, this candle happened, and as soon as it tested here, started to square off the 14,150 put. Massive red candle across the back. This is the entire market. There's nothing to single out. And yeah, I have sold the 14,000 put because the massive IV spike has spiked these puts immensely. So yeah, now the idea is that we will not have too big a breakdown and should be contained. Not sure what this big freak move was, but somebody dumped a huge quantity of the entire Nifty at once, and yeah, we'll keep you posted. I think the idea here should be is, yes, okay, you took a view went wrong, immediately get out. Like yeah, the puts have really started to expand, especially these ones. And luckily the call is leaking quite a bit, so that's compensating when we are basically closer with our calls than we are on our puts. And the 14,000 put is expanded mostly because of that sudden move, that quick move. So yeah, we'll continue to hold the position more or less like this for the last 1 hour. And if we have any counter moves on the upside or a continued downside move, we'll just exit with a stop loss. Yeah, that's more or less it. We'll keep you posted. Okay, something's going on. Basically, Nifty is getting dumped, and well, these puts are very far away, and that's why I haven't explained it much. Despite the down move, have moved down the calls to 14,500. So the calls are about 220 points away, and puts are 280 points. This will more or less not go out of control as long as the downside move isn't like 50 points per tick. This should be more or less fine. And now there's a clear IV spike. So and that premiums will continue to remain good, and we still have an hour to go. So we'll make an opportunity out of that. And the reason I can do that is because I didn't really get burnt in the down move. So yeah. But yeah, the idea will be to be very quick in managing this position in case we see continued down move or a reversal. Now reversal also really exposes us because these calls will expand very quickly. Okay, looks like we're now testing yesterday's low, and yeah, everything is just breaking down. IT, Bank Nifty, everything, Reliance, and so once again here the idea is more or less the same, that yesterday's low should hold for the longest time. Despite the slide, these puts were not gaining any value, and that was fine because the idea was, okay, yesterday's low should act as a support, and the fact that India VIX is still down means that the fear isn't really going up. This could have been a move that was anticipated. There is no incremental bad news as such, nothing that I've heard of yet, leading to this kind of sell-off, which is why you see actually the India VIX is now basically flat for the day. Okay, but there are two reasons this could be happening. One is yesterday there were a lot of positions taken around 14,200, 14,250 and 14,300. This move could have been in place to benefit that. Now currently big IV expansion in the weekly options, especially these on the put option side, so we're seeing them expand quite a bit. My view is that if yesterday's low holds, this will lose a lot of value immediately, and my bigger concern is the upside. I've been very frivolously moving down my calls, and in case there is a reversal of even like 50-60 points, then these calls will really start to bleed. So that is what is the area of concern more than anything else. A continued down move is fine as long as we're trending in one direction. It's completely fine. So the idea will be I have my exit orders set up, and I'm going to more or less start exiting if I see that there is a reversal with an upward trend. Okay, just at this point it's just ridiculous. We basically did exactly what we would have expected. We went, tested the low, and then big green candles. So a lot of people went short, tried to cover, and now we are more or less not making an up move beyond. So we moved back up, tried to head to 14,300, but short covering didn't go so far. Regardless, we got like 15 minutes to go before we get auto squared off, and the idea here will be just to get out at favorable pricing. So just wait until pricing is slightly favorable. I don't think anybody wants to carry home 14,000 put for 25 or 14,450 call for 25. The spread being worth this much when they're going to open in the next trading session at the expiry. So there's some sensibleness in the last few minutes of the market. The strangle premium should erode slightly, but that's more or less what's happening. Okay, the time is 3:10. Basically 15 minutes to go till we get auto squared off. Made a down move, tested yesterday's low, and then quickly made a 100-point up move back to 14,300. Not particularly expecting much upside here, but I'm expecting a lot of the upside IV that has gone up to fall off, at least to a certain extent. In the up move, as was the fear all along, the 450 calls got covered rapidly, started to expand quite a bit, so had to square them off and shift to the 14,500 call. Now I'm just thinking of this from perspective of somebody who's carrying an overnight position. Would I pay this spread, current spread 38, to carry a 500-point long strangle home? Definitely not. So I'm just going to now hold on for the next 5 to 10 minutes, and I have my exit orders ready. The idea will be to exit at some kind of decent pricing. If we don't make too much of a move from 14,300, there should be a good fall off even from this current 40 points what it's worth. There should be a good fall off before the close, so we'll keep you posted. Okay, just exiting now, more or less just break even for the day. The reason I wanted to stay in the trade despite the trend is because tomorrow's a holiday, and that makes it very attractive to stay, and that more or less takes care of that. Okay, so slight loss for the day, but more or less break even day. And I don't know, I think for the day this kind of an outcome is something I'm not too disappointed with. There's only one thing that I would have done differently, would have been adjusting the 14,450 call on reversal. I should have done a little bit earlier, but apart from that, not much else. And yeah, I hope it was a decent trading day for you all, and we opened gap up at basically a ridiculous value of 14,500, and then cascaded down all the way from there. But it was definitely not a day to straddle or strangle, but it wasn't too bad a day to manage, given that it's just more or less one-sided direction the whole time. I think this is one of those days where you look back and say, okay, had you not adjusted, what would have happened? And the outcome would have been terrible. So it's okay to sometimes give up some amount of reward for balancing your risk. And that's more or less what had to do all day. And yeah, happy with the outcome. I hope your trading day was good. Tomorrow's a holiday, so I will catch you guys next on Thursday.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.